So, let's talk about something that pretty much controls your entire financial life, often in ways you don't even see. It's a silent partner in almost every major decision you make, from where you live to what you drive. I'm talking, of course, about your credit score. Now, for many people, this is just some mysterious three-digit number that feels completely out of their control, a grade assigned to you by some faceless bureau. But what it really is a summary of your financial reputation. It's the primary tool lenders and a growing number of other businesses use to quickly judge how reliable you are with money. They use it to decide if you're worthy of a loan, a credit card, or even a mortgage for your dream home. And the stakes couldn't be higher. If your score is low, it's like trying to swim against a current. You're immediately flagged as a higher risk. That means you're looking at sky-high interest rates that can cost you tens of thousands of dollars extra over the life of a car loan or mortgage. We're talking about the difference between a 4% interest rate and a 14% interest rate on the exact same car. It goes beyond just loans. You might find yourself getting denied for apartments because landlords now use credit scores to screen tenants. You could be forced to pay hefty security deposits for utilities like electricity and cell phone plans. Even car insurance companies can use a version of your credit history to set your premiums, meaning a lower score can literally make your insurance more expensive every single month. In some industries, employers even check credit as part of the hiring process. A bad score can create a cycle of paying more for everything, making it harder to save and keeping you financially stuck. But, and this is the most important part, get it right, and you completely flip the script. A strong credit score isn't just about avoiding negatives. It's about actively unlocking a world of financial opportunity. It gives you power and options. You become the ideal customer that lenders compete for. This means you get access to the best interest rates, saving you a fortune over your lifetime. You qualify for premium rewards credit cards that can pay for your flights, hotels, and give you hundreds or even thousands of dollars in cash back each year. You gain the financial flexibility to seize opportunities, whether it's starting a business, investing in real estate, or simply having the peace of mind that comes from knowing you're in control. It's that serious. Your credit score is the key that can either lock or unlock the door to your financial goals. But here's the secret I want to share with you today. Building great credit isn't magic, and it's not reserved for the wealthy. It's a system, a game with clear rules. And once you learn those rules, you can play the game to win. It's about understanding a few simple principles and applying them consistently over time. You don't need a finance degree, and you don't need to be perfect overnight. Over the next few minutes, we're going to give you the complete playbook. We'll walk through the 10 essential steps to mastering your credit. We'll start by showing you exactly how to get and read your credit reports for free. Then, we'll dive into the single most important factor, your payment history. We'll demystify credit utilization and show you how to manage it. We'll cover the importance of account age, your credit mix, and how being an authorized user can give you a boost. We'll also talk about how to apply for new credit smartly, how to automate your finances to prevent mistakes, how to dispute errors on your report, and finally, how to build credit from scratch using tools like secured cards. And we'll talk about timelines. While major negative marks can take time to fade, you can often see meaningful improvement in your score in as little as 30 to 90 days just by applying a few of these strategies. This isn't a get-rich-quick scheme, it's a Get Credit Smart for Life plan. Your journey to financial empowerment starts right now. If you're ready to take control, smash the like button for the YouTube algorithm. It really helps the channel, and let's dive into the first, most foundational step. Welcome to the first and arguably most crucial step in mastering your credit, checking your credit reports. Think of this as the foundational checkup for your financial health. You wouldn't let a doctor prescribe treatment without a proper diagnosis, right? The same principle applies here. You simply cannot fix a problem you haven't seen. So, your first mission, should you choose to accept it, is to get your hands on your full credit reports. This isn't just about seeing a number. It's about understanding the story that number is based on. This is where your journey to a better credit score truly begins. Now, let's be crystal clear. I'm not talking about your credit score, not yet. The score is just a 3-digit summary, like the final grade on a report card. What we need is the report card itself, the full, detailed credit reports from the 3 major credit bureaus, Equifax, Experian, and TransUnion. These documents are the raw data, the line-by-line evidence that shapes your score. They contain the history of your financial life as reported by your lenders. Why 3? Because not all lenders report to all 3 bureaus. A car loan might only show up on your Experian report, while a credit card might report to all 3. This means each report can tell a slightly different story, and we need to see them all to get the complete picture. Before we go any further, a critical warning. As you search for your reports, you'll be bombarded with websites offering free credit scores or free credit monitoring. Be extremely cautious. Many of these are commercial services that use the lure of a free score to enroll you in a costly monthly subscription. They'll ask for your credit card information for a free trial, and before you know it, you're paying $20 or $30 a month for a service you don't need right now. Don't sign up for monthly anything at this stage. Our goal is to get the raw reports, not a subscription service. There is only one place you need to go. Memorize this, bookmark it, write it down. annualcreditreport.com. This is the official, federally mandated website where you can access your reports for free. It was created as part of the Fair and Accurate Credit Transactions Act, FACTA, to empower consumers like you. It's secure, it's official, and it will not try to sell you anything. Once you're on the site, the process is straightforward. You'll click to request your reports, and you'll be guided through a secure form to verify your identity. You'll need to provide your name, address, social security number, and date of birth. This is necessary for the bureaus to find your specific files. After that, you'll face a series of security questions. These can be tricky, often asking about old addresses or past loan amounts. Do your best to answer accurately. If you're unsure, it's okay. You can also request your reports by mail if the online verification fails. Thanks to a permanent change, you are entitled to a free copy from each of the 3 bureaus every single week. For this initial deep dive, I want you to download all 3. Save them as PDFs to your computer so you have a permanent baseline record. Now, it's time to play detective. Don't just skim these documents. This is an active investigation. I highly recommend creating a simple review tracker. You can use a notebook or a spreadsheet, create columns for the bureau, the account name, whether the information is accurate, and a space for notes. This will keep you organized as you go line by line with a fine-tooth comb. So, what are you looking for? We're hunting for errors, and they fall into a few key categories. First, check your personal information. Is your name spelled correctly? Are all the addresses and employers listed actually associated with you? A simple clerical error, like a misspelled name or a transposed digit in your social security number, can attach someone else's entire credit history and their debt to your file. This is called a mixed file, and it's a serious error that needs immediate correction. Second, look for unrecognized accounts. Do you see a credit card, a loan, or a collection account that you never opened? This is a major red flag for identity theft. Third, scrutinize the details of your known accounts. Are the balances correct? Are the credit limits accurate? Most importantly, is the payment history correct? Look for any late payment notations that you believe are wrong. An incorrectly reported 30-day late payment can be devastating to your score. You might think errors are rare, but they are shockingly common. A landmark study by the Federal Trade Commission found that 1 in 5 consumers had a potentially material error on at least one of their credit reports. That's 20% of people. and 1 in 20 had an error serious enough that it could cause them to be denied for credit or pay a higher interest rate. The odds are significant that you might find something that needs fixing. As you compare your 3 reports side by side, you'll notice differences. This is normal. Remember, not all creditors report to all bureaus. However, you should pay close attention to discrepancies in the information that present on multiple reports. For example, does your Capital One card show a $1,000 balance on Experian but a $1,500 balance on TransUnion? Is an account shown as closed by grantor on one report but open and current on another? Document every single one of these inconsistencies in your tracker. This process is your baseline health check. It's the most important 60 minutes you can spend on your finances this year. You need to know exactly what you're working with before you take any other action. I know the temptation is to immediately start paying off debts or applying for a new card to fix things. But please, resist that urge for now. Before you apply for a single credit card, before you pay off a single collection account, you must pull and scrutinize your reports. Why? Because you might find an error that, once corrected, could boost your score significantly without you spending a dime. Or you might be about to pay a debt that isn't even legally yours. For now, your one and only goal is to identify and document every potential error and discrepancy. That's it. Don't worry about how to fix them yet. We'll cover that in detail in a later step. Just focus on the investigation. Now, as you review your reports, one section deserves your absolute, undivided attention: your payment history. If your credit score had a king, this would be it. Payment history is the single most important factor in your credit score, making up a massive 35% of your FICO score. The impact of a single mistake here is brutal. Just one 30-day late payment reported to the credit bureaus can drop an excellent credit score by up to 100 points. That negative mark then stays on your credit report, acting as a drag on your score for up to 7 long years. That's why ensuring your payment history is 100% accurate, and then keeping it perfect moving forward is non-negotiable. The simplest, most powerful solution to prevent future late payments is to automate. Log in to every single one of your credit card and loan accounts right now and set up auto pay for at least the minimum payment. This is your safety net. Even if you plan to pay the full balance manually each month, setting up the minimum auto pay ensures you will never, ever have a late payment reported if life gets busy and you forget. Then, for extra security, stack your reminders. Set a calendar alert for 3 days before your due date. This gives you time to manually make a larger payment. Then, set another reminder for the actual due date, just to double-check that the payment has gone through. Overkill? Maybe. But the cost of one missed payment is far too high to leave to chance. Every single on-time payment you make is a positive data point sent to the credit bureaus. It's a vote of confidence from your lenders, telling the world you are a reliable borrower. Over time, these positive votes compound, building a rock-solid payment history that forms the bedrock of an excellent credit score. So, let's recap. Step 1. Your mission is to become an expert on your own financial history. Go to annualcreditreport.com and only there. Download your reports from all 3 bureaus: Equifax, Experian, and TransUnion. Create a tracker and meticulously review every line, looking for errors in personal information, fraudulent accounts, and incorrect payment history. Nail this foundational step, and you're not just identifying problems, you're taking the first concrete action toward building a fantastic score. In our next step, we'll talk about what to do with the information you've just uncovered. Utilization is used credit divided by total limits, about 30% of your FICO. Keep it under 30%. High scores live under 10%, often around 1%. Pay balances down. Focus highest utilization first. Snowball or avalanche methods work. Issuers report near statement close. Pay most of the balance before that date. Increase total limits. Ask for a limit increase. New card only if it fits your plan. Bigger denominator lowers the percent even if your spending stays the same. Managing utilization is one of the fastest ways to see a significant score jump. Paying off a card feels great, but closing it can backfire. Length of credit history is 15% of your score. Average age counts. Close your oldest card and your average age can drop in half. So can your perceived experience. Keep old no-fee cards open. Use them sparingly and set auto-pay. Exceptions exist: egregious fees or required closures. Otherwise, let them age like fine wine. Light periodic activity keeps the account reporting and preserves your long history. Credit mix is 10%, small, but it helps you go from good to excellent. Revolving, credit cards, HELOC, variable monthly payments, installment, mortgage, auto, personal, student, fixed schedule. Never borrow just for mix. Let it develop with real needs. Auto loan when you actually need a car, or a credit builder loan to add installment history if you're brand new. Stay aware, not aggressive. Let your mix evolve within your financial plan. One of the fastest boosts: become an authorized user on a trusted family member's card. Their long age, perfect history, and low balances can appear on your report. Dramatic impact. It can instantly raise your average age and add flawless payment data. Only do this with mutual trust. You're not liable. The primary is. Ensure the account is excellent. High balances or lates will hurt you. If it checks out, they can add you online in minutes. Often within 1 to 2 months, you can see a 20-30 point bump or more. Every formal application creates a hard inquiry. 1 or 2? Fine. Many at once? Score dip. Lenders read a flurry of apps as desperation risk. Avoid dealer shotgun apps. 10 pulls can cause a noticeable dip. Inquiries remain 2 years, but affect FICO for about 1. Soft checks, like you viewing your score, don't affect credit. Be intentional. Skip store card impulse signups. Space applications by towards 6 months. Apply only when needed and likely to be approved. We forget. We get busy. Bills get buried. That's how late fees and 7-year marks happen. Turn on auto pay for every bill, minimum at least a few days before due. Layer alerts, statement, due soon, payment received, and high purchase notifications. Think Fortress. Auto pay is the gate, alerts are the guards. Check charges, review spending, and act fast on fraud. A 1-hour setup can save years of headaches and hundreds in fees, thousands in interest. Don't ignore errors. File a dispute with the bureau reporting it. Under the FCRA, bureaus and furnishers must investigate and correct inaccuracies. Be specific. Identify the account, the item, and why it's wrong. Attach proof. Upload statements, canceled checks, and creditor letters. They have 30 to 45 days. If they can't verify, it must be removed. Also notify the creditor by certified mail to create a paper trail. Removing one wrong late or collection can boost your score by dozens of points. Welcome to Step 10. If you're feeling locked out of the credit system because you have no credit history or past mistakes have damaged your score, this step is your key back in. We're going to build a solid foundation from the ground up using 2 of the most powerful and accessible tools available: the secured credit card and the credit builder loan. Think of this as your personal financial boot camp, a controlled, safe environment to demonstrate your creditworthiness and rewrite your financial story. Let's start with the first tool: no history or damaged credit. Start with a secured card. This is your entry point. A secured card works almost exactly like a traditional, unsecured credit card, with one key difference that makes it accessible to nearly everyone. You place a refundable security deposit with the bank, and that deposit typically becomes your credit limit. For example, a $300 deposit gets you a $300 credit limit. This removes the risk for the lender, making them willing to give you a chance to prove yourself. When selecting a secured card, you need to be a savvy shopper. First and foremost, Ensure the card reports your payment activity to all three major credit bureaus, Equifax, Experian, and TransUnion. If it doesn't, it's useless for building credit. Second, look for a card with a low or ideally no annual fee. You're trying to build credit, not accumulate unnecessary costs. Once you have the card, your mission is simple. It reports like a regular card, so use it responsibly. This means using it for a small, predictable purchase each month, like a tank of gas or a streaming subscription. Then, and this is crucial, pay the statement balance in full and on time, every single time. This demonstrates positive payment history, which is the single most important factor in your credit score. Keep your utilization low, ideally under 10% of your limit. On that $300 card, that means keeping your balance below $30. The best part is the graduation path. After 6 to 12 months of responsible use, many issuers will automatically review your account. If you've managed it well, they will graduate you to an unsecured card and refund your deposit. This is a major milestone. You've proven you can handle credit, and you get your initial investment back. Some banks might even reward you with a credit limit increase at the same time. Now, let's add our second tool to supercharge your progress, the Credit Builder Loan. A Credit Builder Loan is a fantastic product designed specifically to, well, build credit. It cleverly reverses the structure of a traditional loan. Instead of getting money up front, the loan amount is locked in a savings account that you can't touch. You then make small, fixed monthly payments over a set term, typically 12 to 24 months. Each on-time payment is reported to the credit bureaus as positive installment loan history. This is incredibly valuable because it adds to your credit mix. Just like with secured cards, watch out for high fees or interest rates. The goal here is credit building, not expensive borrowing. Once you've made all the payments, the locked funds are released to you. So, not only have you built a great payment history, but you've also unintentionally saved a nice lump sum of money. Now, here's the master strategy. Using one secured card plus one credit builder loan at the same time adds both revolving credit history and installment loan history to your file. This diversification, known as your credit mix, accounts for about 10% of your score and shows lenders you can responsibly manage different types of debt. It's a powerful combo that can accelerate your score improvement significantly faster than using just one method alone. To recap this step, open one secured card from an issuer that reports to all three bureaus and offers a clear path to graduation. Use it for a small monthly purchase and pay it off in full. Simultaneously, take out one low-fee credit builder loan and make every single payment on time. This two-pronged approach is a safe, controlled, and highly effective way to get back in the credit game and build a score you can be proud of. 10 simple steps to take control of your credit and boost your score. Check reports. Pay on time. Keep balances low. Manage accounts strategically. Be consistent. It's a marathon. Small actions compound into big results. Start today. Pull your reports, set autopay, and pay down balances. A high score opens doors and saves you money, peace of mind included. If this helped, like and subscribe for more on real estate, investing, and simple, actionable money tips. Thanks for watching.